Good morning. Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant. With me, my colleagues Nigel and Breema joins us today. Good morning, guys.
Good morning.
Finally, it's a Friday and we head into the World Cup weekend. But there is more sports, Nigel, for you today, I believe, right?
Yeah, I'm going to be going for my daughter's sports day, so I'm quite excited about that. But the big event is going to be, I'm sure, Sunday night.
11 p.m.
8:30.
8:30.
8:30, okay.
It's a reasonable hour.
A reasonable hour.
So we can watch it, finally.
But it's not looking as great, although it's a Friday, it's not looking as great for markets, right? I mean, we got a real reaction yesterday out of the US markets, a big one at that, and that's basically the two indices in the US and, the 50 stock benchmark index out of the Euro. 3% cuts on the Nasdaq and the Euro Stoxx 50. This is some aggressive selling that we've seen. And I was saying this yesterday morning that the reaction, immediately on the day of the Fed was a whimper. I mean, nothing. It was actually a dovish reaction to a hawkish Fed. We've got more, right? I mean, so for example, you had the two other central bank meetings. Actually, you had 4 or 5, but the two big out of Europe were ECB and the Bank of England. ECB delivered a 50 basis point hike, but in the press conference, Christine Lagarde sounded very hawkish, clearly hawkish. So market expectations of what the ECB will do is also kind of moved up. The other thing is the dollar. And again, something I said yesterday, the one big notable feature of the Fed reaction was that the dollar was down on the day. I mean, it was just baffling, but we've seen a rally. And the dollar is now started to move back up again. That's the DXY. But if you look at the Bloomberg Dollar Index, that is almost back to the 200-day moving average, which was at about 1269.92. It had fallen below the November levels for the first time since 2021. So we are kind of inching back a little bit. Remember, all of this is happening, as we wrap up this year, as kind of participation thins out. But price action is price action, although you should keep that in mind as well. Thinly participated markets exaggerate price action on both sides. That said, as I said, price action is what we're seeing right now. So the dollar is moving higher, has moved higher last night. The Nifty and the Bank Nifty, just to come to our sort of levels here, closed practically at the lowest points of the day. I mean, a few points away from the low point on the Nifty and both the Bank Nifty. The first support for the Nifty comes in at the lower, there's a small channel from the high, the recent high, which is 18,887. If you join the tops from that point on, the support comes in at about 18,280. That's number one. The bigger support, of course, is the November lows. 18,133 is the lows in November, and I think that's something you need to watch out for eventually. The point is bears have been on the back foot, not just this week, this month, all year through, right? And the reason is simple. You see a big correction in the US, things are looking bad, and you go short, you come up the next morning, market opens lower, and just like that, there is an impulse to buy. The dip buying comes back, and people, looking at price action, I would say bears would be people who are short would be very, very scared to hold. What if this keeps going? And it's happened before. But having said that, I would still say, given the given how things are coming together, both in US, the dollar index move, and of course, the basic underlay is that the Fed has been extremely hawkish. Even if you do get a bit of a bounce, don't go all in, be cautious. You don't want to kind of blow up as we wrap this here. This is not the time for that. So that's, I think, my message, at least this morning, looking at the price action. There are stock-specific opportunities. There always are, and we'll highlight those as we go along. Morning, guys.
Hi, good morning. So just some more on the central bank action. While the rate hike was in line with what the market was anticipating, it was the commentary which was extremely cautious. The markets were hoping that we will have some signs of a pivot, but if you listen carefully to the commentary from across the central banks, there is no sign of a pivot just yet. ECB President Christine Lagarde stressed, if you compare with the Fed, we have more ground to cover, we have longer to go, we're not slowing down, we are in for the longer game. BOE committee reiterated that if the economy were to develop broadly in line with their November projections, further increases in bank rates might be required. So all the central banks have revised their inflation forecasts higher, and they are indicating that they're not done just yet. with the rate hikes. And as the FOMC, the Fed officials said, we're going to see higher for longer. Also separately, we've been talking a lot about the Fed, ECB, Bank of England. These were the big influential central banks which hiked rates this week. But apart from that, there were a whole host of central banks which upped rates. So you had the Swiss National Bank, you had Denmark, Taiwan, Norway, Philippines, Mauritius. There are Gulf countries which are pegged to the Fed. So Gulf countries cumulatively have seen a 200 basis points rate hike as well. So effectively this week, nearly 600 basis points of rate hike have taken place across the world, and that is fairly seminal. Talking about the flows that the Indian market saw yesterday, holiday season upcoming, so the flows have thinned out, especially on the gross volume side. Yesterday, DIs bought 260 crore, the FIs sold 711 crore. For the FIs, it's a net sell figure in cash after 2 days of buying. For the DIIs, it's the 7th consecutive day of a buy figure. It's a good thing because in the month of November, the DIIs had sold more than 6,000 crore in the cash market. The fact that it's turned around gives you some hope that if the FIs were to continue selling, the DIIs are there to go ahead and buy high.
Well, Rima, it appears Santa's arrival has been pushed back because of these hawkish central bankers, right?
Yeah.
But, I'm feeling a little bit cautious, actually. The Nifty yesterday, it didn't take support at any level. In fact, the final tick was virtually at the low point of the day. Maybe some part of it was expiry related, but I think it'll be prudent to be a little bit cautious in the near term, wait for global equity markets to stabilize, and then, in fact, take a bigger bet. But don't go all in. That's the advice, going by the data points. And the FIs, well, their short positioning has been increasing. Will they go net short on the index now? That will not be such a bad thing. That could be the trigger that, in fact, the bulls will want out there. Yesterday as well, they added close to 10,000 short contracts and they unwound some long contracts. And just take a look at their positioning. From the start of the series, the long positioning has come down and the short positioning now is at around 46%. I recall at the start of the series, we were talking about the FIs, they being net long. That's the long positions on the index minus the short positions being nearly around a lakh odd. Guess what? That's come down to around 12,000 contracts odd. So in the way those long positioning has come down, the net longs, which again, I'll say it's not such a bad thing. Otherwise, you were in la la land with that 88,000 long contracts, net long contracts. Options data. What broke the back yesterday was the unwinding we saw at the 18,400 and 18,500 put. Close to around 7 to 8 lakh shares got unwound at that strike. And on the upside, there is resistance level because the 18,600 call, 18,700 call, both of them added a fair bit of open interest. Close to around 90 lakh shares added between those two, telling you that at higher levels, we like to see some bit of resistance. So what are the levels you're looking at then? Well, the 20 DMA, a fresh breakout will come only once you cross the 20 DMA on the upside. So that's an important level to track for today's session. While, if we see a bit of a downtick, maybe we go ahead and retest levels of 18,100 or thereabouts. For me, the joke on the pack, though, is the Nifty Bank. It's still trading above the 20 DMA. That's a bit of a support zone. So just keep an eye out on that. If the Nifty Bank can hold on to this level, then maybe, in fact, it'll give the bulls some hope. But otherwise, a little bit cautious in the near term. Keep an eye out on the Nifty Bank support levels. Fresh breakout on the Nifty only once we get past that 20 DMA odd. For starters, SGX Nifty suggesting a bit of a downtick.
Okay, so it looks like the downtick will get extended. Yesterday, the key indices were down 1.5% on the Nifty and the Sensex. And this morning, the SGX Nifty is currently down 60 odd points. On the equities, Gautam Dugar of Motilal Oswal Financial Services expects the markets to remain in a range with a positive bias. He says